Good afternoon, everyone. Today I'm chatting with Mayo Schmidt from Brazil Potash. In today's interview, we get into tariffs in potash and what investors should be thinking about, as well as Brazil Potash, which is a project that we've recently been digging into on the channel with an interview with the CEO, Matt Simpson, just a couple of weeks ago, where we found out that this is a company that projects to generate $1 billion a year in EBITDA that trades at a market cap of around $100 million. I get into all those questions that you probably want me to ask when I have an opportunity to talk to a chairman like Mayo, who's previously served as the chairman of the largest fertilizer company in the world, Nutrien, as well as the CEO of Hydro One, which, if you live in Ontario, is a company that you've surely heard about. All right, everybody, enjoy the interview. Mayo, thanks for joining us today.
What a pleasure to be here, Steve. Thank you.
So, you've got a tremendous background in the potash industry, and there's obviously a lot of talk about potash when we're talking about tariffs and how important of a resource it is for Canada. I know you're the former CEO of Nutrien and chairman, as I understand it. Um, what can you tell us about what's going through your head when you're thinking about the tariffs with potash? How does this impact potash markets?
Even Steve, as a young trader in Canada selling grains to the U.S., I had experience with tariffs, and it does create outcomes and sometimes unintended outcomes, and it's going to be interesting to see with the volatility that's being created now what consequences are, both short term and long term, because I think it creates an environment where countries that are have a significant concern on food security for the understandable reasons will plan for the long term. And so we've got short-term vibrations here that are going to affect long-term thinking and how people uh, reassert themselves in markets or receive in markets, but ultimately who they're participating with long term is going to be very interesting in the supply chain.
This may seem like a silly question, but we're guys who we run a website where we cover equities for stocks, and it seems like potash is really kind of unloved by retail investors. One example of that I can give, I don't know if you're familiar with Altius Resource, ran by Brian Dalton, who has he has a whole bunch of potash royalties in that company, and it doesn't seem like it gets much love, despite the fact that it generates pretty good cash flow. You just don't really see it. We're in the social media world where we just don't see a whole lot of people talking about potash when it comes to the retail investor community. Why do you think that is, that retail investors don't necessarily flock to it?
Well, I think there's a number of things that we've seen when you look at the supply and the bulk of it being in the hands of three providers, which are typically, supplying halfway around the world or at least across continents, and the transportation and logistics, and quite frankly, how they manage themselves on price versus the volume of production and the volatility that creates. And so I think that's why I was drawn to this particular project. Is it's very interesting when you have in-country production in a country that imports 98% of its supply chain. So the risk that Brazil has to all of the geopolitical matters, the transportation, weather, ship setting, waiting to get through passages to get unloaded, it creates an environment where there's certainty, and that's the attraction for this. And I think it's going to be an attraction once we get through the volatility period for investors to say there's absolute certainty. We know Brazil is raising a critical product, food. We know that it buys 98% of its product from out of country, and this supply is coming from in country right next to the production area.
So I want to ask you about that. You brought up Brazil Potash, which $100 million market cap. It's a company. We had Matt Simpson on recently. He's throwing out some projections that it could be $1 billion a year EBITDA company. Normally, we see a guy like yourself that has your background, former CEO of Hydro One. Obviously, I mentioned your background with Nutrien. We don't normally see names like yours associating themselves with these sort of pre-production mining companies. Why is it that you chose to get involved here? What's sort of your vision for Brazil Potash that attracted you to this opportunity?
Yeah, well, frankly, it comes from my youth of being on the farm and having the experience that farmers have with prices. We buy all of our inputs with uncertainty on weather and then uncertainty on markets when we go to sell 6, 8, 12 months later. And when you have an opportunity to participate in food security, and I've spent my entire career moving production from areas of surplus to areas of need around the world, and whether it's rail or ocean going vessels, and the criticality of that, the 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 prospect here of participating to on a new find of a basin that will be one of the largest in the world that will produce potash for many generations will not go untapped. One way or another, this is going to get developed. It is going to get completed. And that's our task, is to be that group that completes it and gets it to market. Because if I were sitting today in one of the two major exporters in the world of food, and I had to import from foreign supplies, two of the three countries are in conflict right now, I'd be focused on how I can secure my supply at a competitive price. And when you're in country and you're not fighting against the wave of logistics to get to market, it's just extraordinarily compelling. And that's what attracts me to it. It's just the industrial logic here is incredible.
I'm I'm curious what the technical due diligence that it takes for you to get involved. I met a guy during PDAC who is a former CIO for one of the large asset managers, and he said he's putting together a private equity fund that would be able to step in and help fund some major gold projects. And I just remember chatting with a friend afterwards and going, clearly a smart guy. He's got the background to do this, but the level of technical diligence to actually get that investment right, there's just the things that can go wrong in mining projects. Now, I don't know anything about potash. I'm not even sure what color it is. So that's the knowledge base that I'm coming from. But I'm curious for yourself, when you look at this project, how is it that you're able to have the technical competence that this project will work?
Well, there's a number of things. One is, this is not a new process. This is putting in a shaft that's been done many times before. It's a product that is critical. It's a proven product. I've not only gone through the data room, but I've also been on site. I've also met with the political leaders in Brazil to confirm their support and how strong it is in many ways. And also the just simply the trade and logistics of it all. I mean, I've spent my entire career moving production to the demand, and there's already the shipping channels exist and uh, operate on a daily basis. So there's very little that can disrupt this other than possible delays from construction, which can happen anywhere. But the certainty of this in terms of the construction and the building is probably the only thing that can cause the delay, but the product in the ground is certain and the demand is certain.
So it's not necessarily like if we're talking about, say, gold, where you might not run into high grade enough gold, or you could run into recoverability issues. Is that not so much a factor in potash as it is with other types of mining?
Yeah, well, you're right. And when it was discovered, there were also 41 subsequent drillings that were completed at $1.5 million each to confirm the supply and to confirm the basin. So there's been an extraordinary amount of discovery work done, while the 21 approvals that were required, the years that they took to get completed. So there's been an exhaustive study done of both the product and the availability and the opportunity to operate in market to extract the production.
Okay, so let's talk about the Brazil market. The nation is the largest potash importer and second largest consumer of potash globally. From your conversations with the people in Brazil, is there any kind of rush to get to potash production?
Well, currently, of course, they have a supply, but they also worry that the geopolitical matters, the Russia-Ukraine conflict gets in the way of that. Belarus with sanctions, even in North America from Canada, the supply chain, whether you have in the last year a port strike, a rail strike, And then the logistics of getting, the 100-day shipments. It's a case of even after production, it goes into storage, then it gets loaded on rail cars, then it gets moved to a port, back into storage, back onto ships, all the way down through the Panama Canal to the coast, and then unloaded and reloaded. So the logistics constraints here are considerable. And this is a product that they find 12 kilometers from the river, which is a 2 to 3 day movement right into the Mato Grosso, the largest production area in the country. It's just such a compelling logistical story here. And the costs associated with that are so de minimis compared to the foreign supplies. It's just got everybody's attention.
So I'm curious, why didn't one of the majors pick up this project? Like I know that there's a royalty agreement with Franco Nevada, who's obviously you got the legendary Pierre Lassonde, who doesn't just throw money around willy nilly. But why do you think that one of the major potash producers like a Nutrien want to go in, or why didn't they go and beat you guys to this project?
Well, there's always who's first and who has the leading thinking. And it was a group of entrepreneurs from Canada that secured the basin from Petrobras, so that was done. So, and then they've gone on to more recently secure contracts with the producers. So they've already taken the demand out of the market. So it's not only the take or pay. What that means is the farming community has committed to 550,000 tons. So that market is already taken now. It's already committed to. So that's 550,000 tons less available for foreign shipments. So, it's a case that, in fact, next week we'll be meeting in the Middle East with invited to talk about opportunities for food security. So, I think it's a case of a number of things, projects that they may already have underway that get in the way of other strategy. And, it's in my mind, it's a case here where the sovereigns that are interested in food security are moving quickly to understand the opportunity, and the strategics will fall in where they fall in and see what opportunities may exist when they're ready to act. But it's undeniable that the production's there and it is going to stay in market. It's not going to get exported. It's going to be utilized, and those contracts are already written for the next dozen years. So that supply chain is already taken for a dozen years forward.
So we've obviously got retail investors that are watching this and they're trying to do their due diligence and their homework. And one of the things that I'm sure that they're all just kind of like, Steve, why aren't you asking this? And I have to ask is the timeline. What do you think that timeline looks like? When do you think you guys will actually get to production and start spitting out cash flow?
Yeah, yeah, no, that's a good question and the right question. 2029. When you think about projects like this, always take a long time because of the permits and the preparation, and then ultimately the shafts and building the plant. Those things are all in motion, and so it's not an unusual timeline at all. And in terms of a startup, it faces the challenges other startups face. But the certainty of the demand, when you look at food, energy, and water, the three critical elements for human survival, this is one of those. And when we have a growing population at 83, an increase on the planet of 83 million people a year, headed to 10 billion, and got arable available land for production decreasing in every country that produces other than Brazil, it's just such a compelling story. So it is going to take to 2029, get the plant done, get the production, but then as I say, the contracts are confirmed, and the supply chain will be there.
Now, I asked Matt Simpson this question, and I'm going to ask it to you as well, just because I know that uh, if I'm a retail investor and I'm sitting back and I'm trying to do my homework, there's something that's going to be going through my mind. We're talking about a company here that projects to do $1 billion a year in EBITDA. That's currently trading at a market cap of around $100 million. But there's this huge risk, and that is how much dilution is going to have to happen before we get from point A to point B. So if you are a retail investor, is there any kind of way that you can get comfort with that roadmap?
Well, I think there is. I think, first of all, when we think about, you know, bringing in capital at the asset level, And then secondly, it's a compelling opportunity right now. And that's why I think, as Matt may have mentioned, I've acquired shares, he's buying shares. I mean, I think it's such a compelling price because of the volatility in the market. And with my first half of my career as a commodity trader, I see this as an opportunity, and I don't think other players will see it any differently. So I think it's really a question of um, what 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 party is going to be interested at this time and take the first step and take advantage of the metrics that exist today in the marketplace, because it's a compelling opportunity even without the discount. But with the discount in the share price, I think it's an extraordinary opportunity.
All right. Well, Mayo, I really appreciate you taking the time to sit down and chat with us. I think that this is one of the most interesting companies that we've stumbled across, and we don't normally get to chat with people who have your kind of background. So we really appreciate you taking the time to do this, and hopefully we can chat again in the future when there's more developments with the company.
Well, I look forward to that, Steve. I have a lot of energy for this project. It needs to happen. It's important for food security for the world, and I'm glad that I'm participating. Thank you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let us know what you think in the comment section. Thanks for watching, everyone.